Continuing from our previous lecture, our next topic is what is the cost that should be excluded from the cost of an asset. These are said to be administration and other general overheads, advertisement and other costs relating to the introduction of a new product or services, conducting business in a new location or with a new type of customer, and cost of training staff, for example, on how to use a newly acquired asset. These should never be included in the value of asset. Another example, A Limited, a registered VAT vendor constructed a factory plant. Details are given you. Construction cost, that is 5,75,000. Import duty that should be added. Non-refundable taxes 1 lakh. Fuel used to transport construction material to the construction site. Fuel destroyed by construction. This is the abnormal loss that should not be recorded in the value of asset. Administration cost, again that should not be recorded in the value of asset. Staff party to celebrate the completed construction. No. Testing to ensure plant fully operational before the start of production, right, it should be recorded in the value of asset. And then the borrowing cost, all the criteria for capitalization which we have not yet studied, but they have mentioned that all criteria for capitalization in terms of IAS 23 were met, so it should be recorded. Advertising for the amazing widgets to be produced by the new plant should not be included, and the initial operating loss should also not be included in the value of asset. Now it is about subsequent expenditure. We have to recognize subsequent expenditure either as capital expenditure or as revenue expenditure. The major criteria is that if as a result of some subsequent expenditure, the original benefit associated with the asset has been enhanced. If the original benefit associated with an asset has been enhanced, then such expenditure is said to be capital expenditure, and that should be included in the value of asset. Now example of these type of expenditures are extension to the asset like factory building. You can also say addition to the factory building, like if you are constructing a few stories more in the building, then the value of building would have been increased. So that is said to be a capitalized expenditure. Second is said to be upgradation of machinery that enhance the original estimated benefit. So such upgradation would also be included as capital expenditure in the value of asset. And third, major inspection or overhauling and replacement costs. These are said to be included in the value of asset as capital expenditure. While the expenditure that should be recorded, subsequent expenditure that should be recorded as revenue expenditures are repairs, maintenance cost, and servicing cost. These should not be included in the value of asset, and these are recorded in the statement of profit and loss as revenue expenditures. Now about inspection and overhaul cost. The main important point is that if the major inspection or major overhauling is a condition, then such cost should be recorded in the value of asset, or you can say it should be capitalized. Like if anything said to be like a condition, it means that it is necessary in order to operate the asset further. When an asset requires regular major inspection as a condition to its continued use, for example aircraft, then such cost must be capitalized as soon as the cost is incurred or an obligation arises. This inspection or overhauling cost will be recognized as an asset. And also this major inspection asset cost should be depreciated over the period until the date of next inspection. Like if you have incurred inspection cost or overhauling cost now for 10 million, and further overhauling or inspection cost would have been incurred after a period of 5 years, then it means that you have to depreciate that 10 million of inspection cost over the period of 5 years, and depreciation cost of 2 million would be recorded in the statement of profit and loss. But remember, there are some assets like aircraft for which it is necessary to have proper overhaul or major inspection in order to use that asset further. So such cost would be included or would be recorded as capitalized asset, and also it would be depreciated. For example, Standard Company purchased a machine on 1st January 2007 for 8 lakh. It is being depreciated on a straight line basis over its useful life of 10 years. Residual value is 20,000. On 1st September 2007, means after a period of 8 months, as per legislation, Standard Company fitted a safety guard to the machine. The safety guard cost 40,000 and has a useful life of 4 years with no residual value. What amount would be charged to profit and loss for the year ended 30th November 2007 in respect of depreciation on this machine? So importantly, you need to consider the time period. For the sake of machinery which has a cost of 8 lakh and useful life is given as 10 year, you need to calculate a depreciation expense for 11 months period, because from 1st January 7 to 30th November 7 it is a period of 11 months for which you have to record the depreciation expense. But we have ignored the value of residual value, so need to consider this. So it is 8 lakh minus 20,000 divided by 10 years multiplied by 11 by 12. This is the depreciation charge in respect of machinery, and that would be as we need to calculate a depreciation for 11 months, it will be 71,500. Further, we need to consider depreciation on the safety guard that has a cost of 40,000. It has a useful life of 4 years, and we need to calculate depreciation for the period of 3 months only. So it will be 10,250. So total amount that should be recorded in the statement of profit and loss as depreciation is 74,000. Another question: a ship is purchased for 1.3 million cash on 1st January 1 when the economic useful life was given to be 10 years. The ship may only be used if it is inspected for fault every 3 years. The 2010 inspection, if you consider that 2011, then 2010 inspection was done on 31st December 2010 and is included in the purchase price, although the exact cost thereof is not known. The next inspection is due on 31st December 2003. As the next inspection is due on 31st December 2003, the expected cost of this future inspection is 4 lakh and the present value thereof is 3 lakh, discounted to 1st January 2001. Required show how this should be generalized in 2001. As this cost of 1.3 million, ship's cost of 1.3 million, inspection cost was also included. This point states that the 2010 inspection was done on 31st December 2000 and is included in the purchase price, although the exact cost thereof is not known. As we don't know what is the exact cost of inspection, but we need to identify that. Why so? Because the ship has a useful life of 10 years while the inspection cost lost for the 3-year period. So these will be depreciated on separate useful life. On the basis of next information given in the next line, the next inspection is due on 31st December 2003 and expected cost on that date on 31st December 2003 will be 4 lakh, but its present value is 3 lakh. So we'll consider that the present value of inspection 3 lakh is included in this cost of ship. So the depreciation on ship would have been, or you can first say the cost of ship excluding inspection cost of ship you need to identify that inspection cost plus ship cost is 1.3 million. Identified that the present value of inspection cost as 3 lakh, so same is to be considered as the inspection cost that is included in the value of ship, and if we subtract this amount from the total cost, we'll get the cost of ship 1 million. Now depreciation on the ship would be recorded as 1 million divided by 10, and that would be $1 lakh, while depreciation of inspection costs, as inspection cost is identified as 3 lakh and the period for which it lost is 3 years, so the depreciation on inspection cost would be recorded again as 1 lakh. So total cost that would be recorded in the statement of profit and loss in case of depreciation is 2 lakh.